All right, everybody. So we're just going to take a look at the ES and what opportunities presented themselves. First thing to notice is the high time frame or the high brick size chart. It's down, but what you'll notice is this climactic action right here had it's like 1.3 million, 1.31 million. It had a lot of 1.31 million contracts here, and it reversed and went higher. So this, I'm not sure where. All right, so it was a spring of this low, and that's where demand came in, right? So that's really important, period. And we want to see if this move here, this is all just a bigger pullback, and they've already taken out this level, and I don't think this high has been taken yet. So it might be, if one of these might be targeted. It's either this one or this one to take out that area and then continue the downtrend. So the first high here has been taken. The second high almost, but not quite yet. So this high is 30.75, and this is 30, and that's 30.25. Holy cow, by 2 ticks. So look at this rejection that came from that high, right? And then after that, I'm surprised that this wasn't taken. It's 2 ticks. Maybe it's going to get taken now, or maybe both, this high and this high, both get taken. Anyway, so whatever. We'll see how this plays out, and instead just look at how the accumulation and distribution structures. Now, I want to make a point here, and that is you never just take signals blindly, because there's a lot of manipulation in the markets, meaning highs and lows are broken and they turn out to be upthrust and springs to go in the other direction. So all your signals, any mechanical signal will give you buys and sells, but you have to apply judgment to identify. There's no other way to filter them, because highs and lows are taken, more volume comes in, all technical indications show you that that move is legit. They'll use trend, they'll use price volume, all of that, but it'll go the other way. So the only way is to use your judgment. Even if you have signals, I would say I don't think it's possible just to be a signal trader in markets. It would just, I just don't think it's possible, and I've tried a lot of different things already, so I know that that's the case. Because there's legit selling in order to buy. There's legit selling to do the stop runs. There's legit selling to do springs. That's legitimate selling. So any sell signal will give you a sell, because legitimate selling, price, volume, trend. But that selling is then followed by buying to go higher. And you cannot predict it. It just either comes in dynamically or not. But anyway, so let's just take a look at the trades. All right, so the market started off by going down. All right, so we just start off here at 6. It started off by going down, 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 giving really bearish indications. I mean, it was pretty bearish. So you can tell that right here was a very strong drive down. 1940, 35. It is very strong selling, right? So what you notice was that during this leg down, during this leg down, it's going down, 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 down here, the thrust started shortening. The big green bar comes up, it looks like an upthrust, and then it starts holding. This, believe it or not, turns out that it was a base, and it broke out to the upside. So the key things here is that when it went down, it started basing out, and then it broke out to the upside. During the break, there were certain things that I saw. One was this. That 3,500, that was, put it like this. If it's not going down on that, and instead reversed, you could call it effort. Effort or bag holding. Someone's buying here in order to go the other way. Now the picture is very bearish. Look, the picture is very bearish. It's going down, 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 bearish, right? Red wave, red wave, red wave, red wave, red wave. But at this level, buying comes in. They make like this three-point thing. I forgot what it was called, but it's just like a spring and a retest, or a shortening of a thrust and test, etc. So for me, I knew that they're going to reverse the market, and it's all a matter of just getting in and just entering your order. So it gave a little pullback, and then it went, and that was the morning trade. There's no way to, unless you're familiar with this market, you can't trade it without knowing that, like the behaviors. Why? Because look at this selling. Look at this selling. Clearly, Big Red says, I'm going down. What's interesting, though, is the following two. What happens to the volume? Totally changes. Totally goes down. 129 to 40 to 21, and this guy picks up 54. Second pullback, 49, and then you have a breakout above that effort. And that leads to this move here. This is very challenging to, I say very challenging, but you just needed to know to get in. All right. Now there are some tools that you can use. I'm going to show one of them, which believe me, this is a very good tool. Okay, so I'm going to show this. If you all know that I'm a big fan of market breadth and market internals, but I just have to use them the way I understand them. So here's the thing. As it's going sideways, right, and it gives this breakout, I want to make sure that this breakout is being supported by market breadth. If it's not being supported by market breadth, it's not going to work. It's just, there's something off. Something's quote unquote diverging. So from the beginning of the day, you see up, down, up, 166, buying. So I knew when I saw that, 123 and 166 and the pullback in between I had 85. Don't worry about the beginning print, because beginning print is always high, and it's pointless to use it because it's just the beginning of the day in the open, so you cannot use that. But, the first wave, like legitimate wave, and that it showed buying and buying. So this I knew was being backed by the market. It's being backed by the market. By the market, I mean by the majority of stocks. All right, so add market breadth to your repertoire. Any market breadth indicator will work. It's not a big deal. Just add something that gives you, an idea of where the majority of stocks are going, either up or down. That is not the ES. Okay, ES is a different animal. You need to have some type of statistic over the markets, over the the stocks to see if they're going up or down. The majority of them and how many are going up, etc., etc. So it goes up. It's supported by market breadth. I know there's, that it's legitimate. It's not a, what is it called? False move. That the stocks themselves are making higher highs, and then it goes. Now here's the second trade. So now you go down here, okay? Now here's where it gets interesting, because if you look at this wave by itself, again, folks, if you just use trend ideas of trend, I understand that, everyone thinks trend works and all of that, but intraday, relying just on highs and lows, it will get you. Because I'll give you an example. Here, if I just showed you this, you would buy the pullback. If I go up, down, up, pull back to the mean, you'd buy the pullback. And you know what happens? It gets taken out. Boom. Again, if I showed you this, strength, pullback, strength, you'd want to buy the pullback. If you just put your order here and stop here, thinking this zone or something like that, look what happens. Taken out. You see? So I mean, it's not going to work. If one indication that'll help you is the market breadth. You see this higher high? It's not making a high here. On the market breadth, it's diverging. So something's not right about this high. If it's not making a higher high on, if you make a higher high on what is it, on ES, the market breadth, whatever internal you use, it's not making a higher high, there's a problem. All right, it means that it's not based on the stocks. It needs to, an index should be moving up and making higher highs as the stocks are making higher highs. Same thing with lower lows. If the stocks are not supporting the move, there's a problem. I mean, that's just the bottom line. So anyway, it goes down here. Here, I wanted to go long, but something is off. What was I? So you have 76, and I think it didn't really make a higher high, so it's like a little bit off, but you could tell the volume's coming in right there. Now here's the thing: is it the volume from the breakout of this area? Is it that, like it's breaking out, or is it supply from the top trying to push it down, especially after this? So when this happens, I'm pretty bearish. I'm like, uh-oh, problem, right? Because it's being supported by breadth, by market breadth right here. See that make a lower low? 83 stocks went down. Right. So it's being supported. But if you see what happened here, if you're going to now short, right, there's a problem. What's the problem? Market pulls back, giving the test, the re-entry, like the test to get in, but it's totally negated here. Why? 107 stocks go, and this is a bullish indication. Why? Because it's all been wiped out. The 83 stocks going down have been wiped out, with 107 going up, which means the market's going to go up, and it's really a bullish indication. That's what happens. So there you go. There you go. The problem here with the short was that on the pullback, it wasn't a pullback. It was a lower high. Let me show you. What I did. It's a lower high there, right? Like, watch. Here, it's a lower high, right? Here it's a lower high. Now I noticed the spring and I noticed the upthrust, and you don't know which one's which, like what's telling the truth, right? Here's the high, and this is the spring and the upthrust next to each other. But this high here is a lower high. On the market breadth, though, what happens? That happens. 107 picked up. It's not a lower high. Here in the ES, it's a lower high, but in the market statistics, it's market breadth. It shows that the 107 took out, reclaimed all of the 83 progress down. So, that's all you need to know. I'm telling you that whatever short from this up thrust and retest, it's not going to work, or the chances are quite low, and it's going to go in the other direction. It's diverging, meaning the stocks and the indexes, they're diverging. The stocks majority versus the index, not making sense. And so what happened was it went higher, and that's all you need to know. So if you're short here, like for me, if I'm short here, I'm going to consider exiting at break even, and possibly if I see the other move and I'm confused whether that's bullish or not, I would see it as a higher high and say, yeah, it is bullish, and here's the buying which initiated the move up. All right, that's all I have to say. If you take anything away, just take a look at market internals and have at least one internal that allows you to see what's going on with the stocks. All right, take care. Bye.